Isn't it fascinating when the altcoin market is crashing, when Bitcoin is coming down, that there is this one altcoin, Pippin, that's outperforming here. Let's have a look at the data. Let's look at on-chain metrics, who's buying here, who's selling here, to try to figure out how much longer this rally can last. Now, this is not the first video on Pippin on this channel. I've published several videos before. The very first one was published 396 days ago. It underperformed the average video on this channel in terms of views, yet it still got 60 subscribers. More videos followed. This video made 23 subscribers, another one over here, another one over here. It seems like over time the attention on Pippin tends to rather decline. Now, interestingly enough, Pippin is now the largest Pump.Fun ecosystem token. So Pump.Fun is the launchpad of meme coins on the Solana chain. There used to be a lot of speculation roughly 1 year ago. Then many of those tokens came crashing down, and Pippin is a late bloomer. It's one of the few tokens that can outperform. It's now the largest. It's got 400 million of market cap, and many of those tokens, they used to be in the billions of dollars in market cap. Fartcoin, for example, number 2, it used to have more than 2 billion of market cap, but now it's down to less than 200 million. Now, what we see over here, that's the Pippin chart relative to the altcoin market. Because in general, crypto is going up and down with a lot of correlation, right? When Bitcoin is rallying, many altcoins go up. When Bitcoin is crashing, many altcoins come down. So we have to look at an altcoin performance relative to the altcoin market in general. And then we get this chart here. We've got our phases of very quick outperformance, more than 4,000% over here, or more than 6,000% over here, but we've also got our massive crashes. From top to bottom, a decline of 95%. And if you just assume that this is going to be the long-term trading range, we are currently rather at the upper end of the trading range. What we see over here, that's the actively traded tokens on the Solana chain, ordered by their liquidity pool size. So how much capital is currently in the token? Pippin is at number 1 with 12 million of liquidity. 23 million of trading volume happened in the last 24 hours on Radium, that's a decentralized exchange, and more than 1,500 wallets interacted with the token in the last 24 hours. Interestingly enough, there were more sellers than buyers. 60% sellers, 40% buyers, while the price went up by 28%. So in other words, it seems like the buyers are moving much more capital than the sellers do. But let's have a look at a bit more details for the on-chain metrics. This here is the number of first-time traders versus recurring traders per day on the Solana chain. There is no clear trend here. The number of token transactions, though, they did spike quite a bit in the last 3 days. Here we've got the trading volume. So on the left side in US dollars, on the right side segregated by different wallet cohorts and normalized to 100% per day. It seems like the small retail investor now makes up more of the general trading volume. And what we see over here, that's the small investors versus very large investors, and in the middle it's just the average investor. So on the left side we've got the number of wallets with at least 2,500 Pippin tokens. That's roughly $1,000 worth of the token. In the middle it's $10,000 worth of the token. On the right side it's $100,000 worth of the token. So really it seems like the number of investors, the number of wallets holding the token is rather going down, not up. So how does this then explain this chart here? Why do we suddenly see Pippin going up when the number of investors tends to go down? Have a look at this little warning. This is on CoinGecko. According to Bubble Map, on-chain data shows 80% of supply is controlled by interconnected insider wallets. There's also an X.com post around this. Here's the ownership. 80% of Pippin is worth by those few wallets. And this is quite common knowledge, right? There's more than 100,000 views on those kinds of posts. And so maybe in the end, it's not the on-chain data that really matters. Maybe something else is really driving the price. Again, we had roughly 20 million worth of trading volume on Radium, so on a decentralized exchange for the spot market. But have a look at the bets on the price on the perpetual futures market. Here we had 846 million worth of trading volume. So really what seems to be driving the price here is the bets on Pippin. It's not buying and selling of the Pippin asset directly. It's just people betting on the price and then a few insiders manipulating the price. And those insiders might be within Binance. At least that's what the data suggests, right? Why else would Binance offer perpetual futures on an asset where it seems like all of the ownership is just by a few heavyweights that might manipulate the price in any direction. And so let's have a look at the perpetual futures data. Let's have a look at how many bets are currently made on the price and what kind of impact this might have for Pippin in the future. What we've got over here, that's the open interest. There is correlation between open interest, so how many bets are currently made on the price, and the price itself. So more attention on the asset tends to also mean a higher price. Open interest has now spiked again. It's not at all-time highs, but it is growing. And so is then also trading volume, right? The more trading volume we have on the perpetual futures market, the higher the price tends to be. And it appears as if the price always moves in the opposite direction of where the majority of market participants are currently making their bets. When the price is going up, the shorts are getting liquidated. When the price is going down, the longs are getting liquidated. So really, what I believe is going on here fundamentally is that Binance offers bets on a certain game, but at the same time also has impact on the outcome of the game. Imagine a sports betting house. So you offered bets, say, on a soccer match, but at the same time, when you're that sports betting house, you also have influence on the outcome of the game. So you're accepting bets and you see that many people are betting that team A is winning, and then you're paying the referee that in the end team B will win. And you're just taking the counter position of what the majority of retail investors are taking. That's probably what's going on here with Pippin. This does not seem like an organic rally. The number of investors is going down, and in general, the market itself is bleeding. And for whatever reason, Pippin is doing the opposite. And that reason, I believe, is very likely just market manipulation by a few heavyweights. And they move the price in any direction they like. They just move it in the opposite of where the majority of people place their bets. And so probably technical analysis like this is not too useful. I simply just stay away from games like this. I do not want to be involved when the market makers are playing their games. I don't want to have Binance as my competition. I'm in crypto because it's an inefficient market. I want to play against the not so experienced players. If I see an organic rally of a meme coin and many retail investors are getting in, I might get in as well and then simply sell earlier than them. But when I see a meme coin going up because a market maker is manipulating this upwards, then I think it's too dangerous. I think it's better to just stay away and to simply just stick with Bitcoin, especially during times like this. What I find fascinating is just how bad the altcoins are doing. This is the performance in the last year. And just have a look at how poorly some of those altcoins did. Minus 84%, minus 95% even over here. Many minus 80s as well. And the others dominance, the measure of how much of all of crypto is currently in the altcoins that are not in the top 10, that's going down since the beginning of 2022. The altcoins have underperformed on average by 62%. Now this is only measured in market cap. And there is a strong distinction to be made here because market cap developments are very different from price developments. Here is what I mean. This is how many new tokens get unlocked every single week, at least for the tokens that have been tracked on Tokenomics.ai. This tends to be close to 1 billion of additional potential sell pressure. So early investors, venture capitalists, they get tokens that they can unload. The team, they get tokens that they can then sell. There's always a party that gets those new tokens, and that might lead to additional supply, depressing the price. Really, the reason for this are people like this, Andreessen Horowitz, or like this, Sam Altman. On the topic of Sam Altman, right, the founder of OpenAI, he's also supporting a project called WorldCoin. This is the number of WorldCoin tokens over time. And of course, developers and investors get more and more tokens unlocked every single month. And so this is then what that means. Just have a look at the following two data points. So we've got the WorldCoin price close to $10 over here. It lost 95% of its value. It's currently at 40 cents. Have a look at the same data point in terms of market caps. That was at 1.4 billion and is now at 1.3 billion. So the market cap has barely changed. The market cap maybe went down by 25% or so. The price went down by 95%. That difference is token dilution. That difference is payouts by the Andreessen Horowitz and Sam Altmans of this world. That's why the picture looks the way it does. And so there are two potential ways to deal with this, right? We can just forget about the altcoins altogether because it's a rigged game, Or we can try to take this market structure to our advantages. We can bet on falling prices of altcoins, and that's what I've been doing for the last 5 years. Here is my monthly outperformance over buying and holding Bitcoin over the last 5.5 years, roughly. The dotted line here, that's the 12-month moving average. So we are now close to an all-time high in terms of 12-month outperformance versus Bitcoin. And that's then my portfolio. That also includes dollar cost averaging. So that's a combination of saving money and outperformance. The outperformance over here is, by the way, 2.3% per month if we average out all of those data points. And so I started a copy trading pool last year as well. Bitcoin during the time period lost 25%. We made 17.3%. And so there's another copy trading pool this year, 2026. It's described over here, the relative valuation altcoin trading. It's running on a platform called Hyperliquid. 10% of the gains are profit share. There's a 5% deposit tax. And there's also other strategies that you can take advantage of. For example, here, the Ethereum trend following. Over here, the Bitcoin trend following. Here's our performance for Bitcoin trend following. It's currently got an APR of 55%. And here's our performance for the Ethereum moving average vault. It made 40% so far, and it's the best performing trading strategy on the entire platform. Ethereum trend following is on Gravity. So those are all our automated copy trading capital pools. This is all available to the premium members of this channel. Premium is available for $125 per month. You can simply just deposit on the first month, and if you don't like the content, if you don't like the additional videos, etc., you can actually unregister after 1 month and just keep your capital running. If you want to save some money, you can also sign up for the yearly membership. Then you get $250 for free, and then you can also include the relative valuation trading capital pool. So the capital pool where we bet on falling altcoins, that's only available to the annual members. The other two trend following strategies, they are available for all members, so also for monthly subscribers. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.